Welcome back to Will of the Market. Today we're going quantum. We're talking about IonQ, ticker IonQ. The promise is huge, but the road is risky. We'll break down what IonQ does, how it compares to its peers, and whether investors are riding the wave or bracing for trouble. Think the Matrix meets Silicon Valley. Let's dive in. Part 1. What IonQ does. First, what is IonQ? IonQ is a quantum computing company based in Maryland, building trapped ion quantum computers and full software, hardware stacks that integrate with cloud platforms. They aim to provide quantum computing access for chemistry, optimization, finance, logistics, encryption, and more. Their systems are available through major cloud providers, and they support multiple quantum programming languages, SDKs. They're not just building the chips, they're building the full environment: hardware, software layers, developer tools. Their hope is to be a quantum infrastructure provider. In 2025, IonQ also completed the acquisition of Oxford Ionics for about $1.08 billion, in a cash plus stock deal, to deepen its technology and control over qubit innovations. Part 2, Peers and Competitive Landscape. How does IonQ compare with peers? Peer set, competitors: Rigetti Computing, D-Wave Quantum, Quantum Computing Inc., and broader tech giants, IBM, Microsoft, Alphabet, investing in quantum R&D. Each uses different quantum approaches: trapped ions, superconducting, annealing. IonQ's strength is in its trapped ion architecture and full-stack offering. Strengths for IonQ: already integrated with major cloud platforms, AWS, Microsoft, Google, gives distribution and access advantage. Ambitious roadmap. At their 2025 Analyst Day, they laid out goals to build systems with 2 million physical qubits and 80,000 logical qubits by 2030. Strong cash position from recent equity raises. Challenges, risks. Not yet profitable, large losses. High cash burn rate, estimated $36M quarterly, with reliance on future capital raises. Valuation stretched. Multiples far ahead of revenue prospects. Insider, executive stock sales draw scrutiny. Part 3. Recent investor sentiment and price moves. Let's zoom into how the market and investors are reacting. IonQ's stock has shown strong rallies. After its Q1 earnings, shares jumped approximately 21.2%. In recent weeks, IonQ's stock soared approximately 45% in 5 days following analyst upgrades, momentum, and developments. In September 2025, IonQ soared approximately 33% on key developments and renewed optimism. Analysts have raised price targets: Needham to $80, Craig-Hallum to $65, Cantor Fitzgerald to $60. On the downside, executive stock sales have raised questions about confidence. Sentiment metrics. According to TipRanks, approximately 2.2 to 2.4% of retail investors hold IonQ, but sentiment is labeled very positive. Also, IonQ is raising capital, a recent ATM offering, to support growth and cash position. So momentum and optimism are strong, though some caution lingers around valuation and insider action. Conclusion. If IonQ were a character in Star Trek, it's the bold explorer, daring to go where no computer has gone before. The vision is grand, the risks high, the timeline long. My take. IonQ is a speculative play with massive upside if breakthroughs come. But don't go all in. This is frontier tech, not reliable income stock. If you believe in quantum's future, a small allocation may make sense. Otherwise, treat this as a high volatility, high reward bet. If you liked this deep dive, hit like, subscribe, and drop IonQ in the comments if you want a head-to-head IonQ versus Rigetti versus D-Wave. Until next trade, may your gains be curious and your losses small.